Bitcoin is no stranger to volatility, but this latest downturn has been sharp, fast, and for many investors, unsettling. After significant gains earlier in the cycle, we're now seeing aggressive selling pressure, renewed macro concerns, and growing questions about where or whether there's a floor in sight. So, what's really driving this move? Is this structural risk or simply cyclical turbulence? I'm joined today by two Bitcoin bellwethers, Roy Kashi, CEO of Falconedge, and Scott Ellam, CEO of XCE Connecting Excellence, to help answer some of these questions in this episode of The Expert Exchange. So, Roy and Scott, thank you so much for joining us today. Roy, do you want to introduce yourself?
Yeah, sure. Thanks, Ricky. Good to see you again. I'm the CEO of Falconedge. We are a hedge fund advisory business with a Bitcoin Treasury management policy. We've been IPO'd on Aquis since November 2025. We are also listed on the US on the OTCQB market since early February. Our plan is we advise hedge funds on the advisory side on the non-regulated activities. We spun off from our parent company, which is a billion-dollar hedge fund, full scope FCA umbrella business with its own internal capital allocation fund. Half the assets have been in crypto for the last 9 years. So for us, we use our yield strategies to get a yield on our balance sheet to incrementally grow and compound a yield on our balance sheet via our strategies in Bitcoin.
Thank you. And Scott, tell us a bit about XCE.
Yeah, so I'm the CEO and founder of XCE, which is Connecting Excellence Group. So we're an international executive recruitment company. So a traditional business that places senior level candidates at vice president level, director level, partner level, C level in industries such as professional services, business advisory, logistics, life sciences, medical devices. But since 2021, we have had a Bitcoin standard balance sheet and we are Bitcoin only. So we've used all surplus cash to purchase Bitcoin from 2021 onwards as a long-term treasury reserve asset. And we recently listed on Aquis December, and we've just gone on to the OTC QB markets in the USA over the last few working days. And I've put together a capital markets team and a Bitcoin treasury strategy to be able to access the capital markets and increase our Bitcoin per share and Bitcoin holdings through equity raises. Also, we've launched a XE Bitcoin bond program, so Bitcoin denominated bonds. It's an expert Bitcoin treasury team on the balance sheet side of a business, and then it's an expert international executive recruitment team on the operational side of a business. And combining both of them with the public limited status, we're now able to attract high billing executive consultants to the operating business to drive more cash flows, to buy more Bitcoin, and also make us more attractive to the capital markets and those institutional and retail investors looking for operational growth backed by a Bitcoin treasury and Bitcoin balance sheet.
Well, thank you both again so much for joining us on this episode of The Expert Exchange. Roy, my first question is for you. Bitcoin has seen dramatic drawdowns before, right? 30, 40, even 50% during broader bull cycles. This current move feels fast and intense, though. So from your perspective, is this different, or is this just another chapter in Bitcoin's historical volatility?
I think it's broadly in line with the DNA that we've seen how Bitcoin's traded over the last 10 years. I think as there's more leverage in the system, it's become more commercialized and institutionalized with the ETFs, with all the different mechanisms how you can access Bitcoin. The moves do get more exaggerated. They can be perceived to be harder and faster, but I think the premise is still there. It's one of those assets where uh, when things are going up and it's going up in a straight line, everyone thinks it's the best asset in the world and everyone's going to pile in. It's going to 500. When it's going down, everyone thinks, oh, it's terrible. So you get the exaggerated moves, add leverage into that. That's where you see where we are today. That said, I mean, I think it's very evident here. You're starting to see some real change in how it's moving over the last kind of 2 weeks. It feels like a floor's finally coming in. I'd like to think this is where we're going to see a bit of a range trade here before it takes off again. But that's just my personal opinion.
Well, thank you for your opinion. Are we looking at retail capitulation here, institutional repositioning, macro-driven deleveraging, or a combination of all three, do you think?
I think it's definitely a combination of all three. You tend to see retail reacting first, which can trigger a little bit of momentum selling. I mean, you saw the Jane Street news last week, which I think has, looking back at it 10 a.m. every day, like clockwork, you started to see the moves down. That's obviously had an effect. And that also comes back to the institutional flows and the leverage in the system. Via different mechanisms, you're able to, for such a liquid and incredible asset, to still on a large scale, you're able to manipulate the volatility to an extent. But I understand the pain that some investors can feel seeing go from 125 to where it is now. But for us, it's a long-term asset and it's an opportunity to accumulate at lower levels. And as we make our monthly yield, we're getting more Bitcoin at better levels. So from the Falconedge side, we're in this not just for next year, the year after, for the next 10 years. So we're comfortable, we're relaxed.
And Scott, from a market structure standpoint, when you see a move like this accelerate so quickly, what typically amplifies that volatility? Is it leverage in the system, thin liquidity pockets, algorithmic trading?
Well, I suppose when you look at the amplification of the volatility, we focus on the long term. So when I first started a Bitcoin balance sheet in 2021, I think the price was about 51,000. It went up to 61,000 shortly after. And then we had an 80% drawdown triggered by a third party outside of Bitcoin. So it's used, any volatility, any amplification, any leverage is always third parties. It's Bitcoin itself ignores that and continues every block, every 10 minutes to the same supply schedule forever. So it's human nature that causes the volatility. And I think a few weeks ago, you've seen quite a sharp, fast drawdown over 1 or 2 days. And that, to me, I don't look at the short-term price. We buy price agnostically. And if I just confirm that 4-year period when it drew down 80%, we bought throughout that entire drawdown and all the way back up. And 4 years later, we came to an IPO with 120% return on the Bitcoin. And to people who don't understand Bitcoin, it probably looked like a poor idea for the first 2 or 3 years of doing that. So we look long-term and buy price agnostically. That short-term violent volatility that we saw a few weeks ago felt to me like it was just for sellers. Roy mentioned Jane Street and the manipulation that you tend to see a little bit more of when it comes to leverage in Bitcoin. But it felt to me like people who were leveraged, you see margin loans and forced selling cascading down until it found a floor. I would put it down maybe to a little bit of manipulation in that sense. But ultimately, it's people covering their positions or closing their positions and a cascading wipeout of leverage, which is healthy for the asset class, healthy for the market, and rewards those who are not leveraged, who are buying consistently and holding over a long period of time.
Bitcoin trades 24/7, like you just mentioned, right? Across multiple venues globally and often with significant leverage involved. Structurally speaking, what makes Bitcoin more prone to violent swings compared to traditional assets? You kind of alluded to it a bit there.
Well, it's been between a $1 and a $2 trillion market cap in comparison with gold's, let's say, between 20 and $30 trillion market cap, because gold's also had some quite violent swings recently. But Bitcoin is the strongest network in human history. It's got a set monetary policy. It's capped to 21 million forever. What we're witnessing from 2009 to today is the birth of a global reserve asset class. And it's the first time had a pristine collateral. So imagine if we'd discovered gold in 2009, what would that adoption look like when priced in or priced against dollars? Now, if you look at Weimar Germany, for example, the chart, when you look back at that hyperinflation and currency debasement that they went through, which I'm not saying is close to what we're going through now, but what we are going through is currency debasement over a long period of time. You look back at the gold chart in that era, it was violently up, violently down, violently up, violently down, until it was just violently up. And I think if you look back, the longer you look back and the further you zoom out, if you look at a 200-week moving average in the Bitcoin price, it tends to just trend up. If you're looking at the short term, it could be down 5,000 by the end of today. It could be up 5,000 by the end of today. You've got to look at this asset class from a time in point of view, not a timing point of view.
To you, Roy, for a second. When you look at Bitcoin through a portfolio allocation lens, what tends to trigger institutions to pull back risk?
I think it's how Bitcoin is seen, which I think is the wrong way to see it. And I put something out last week about this. Fortunately, it's still seen as a risk on asset rather than a risk off asset, while gold and silver are still seen as the safe haven where people duck to and they go run for cover. Let's just buy gold and to a lesser extent silver, which is wrong in my opinion. If you're looking for something that's for a precious commodity where you can store your wealth in for safety in times of uncertainty, there isn't a better asset than Bitcoin. It's for not just the finite amount, as Scott Lewis said, it's the 21 million. There can't ever be more. It's the fact that you're not going to chip off a bit of gold in times of need and take it with you. Bitcoin is fully immutable, transferable, liquid, transactionable, like no other asset class that we've ever seen. And if talking about volatility, there's still that thought by the general uninformed, uneducated community that Bitcoin is still some asset that could go to zero, which it never will do. Whilst gold is just gold because they can see it, they can feel it. And silver is a similar, but actually if you're looking at volatility, silver has been far more volatile than I think Bitcoin has been in the last few years. I think we've seen it go up 200%, up to 120, back down to 65, back up to 100, and now it's back up down to 80. Gold isn't that far behind in terms of volatility. So for me, I just think it's not seen how it should be, which also tells me that we're still so early on it, which is why, we're going to be looking back at these moves in 2-3 years time and think, oh, do you remember that time where it fell and we weren't sure where it was going and we're now sitting at 300? It'll just look like a blip on a chart that's still going up. As Scott said, when you look at the moving average, it's a constantly trending asset. That's still happening, but we're just having those swings in between, which can feel painful, but I think long term we're going to be looking back at this thinking, yeah, that was nothing. It was just a blip.
Roy's packed a lot into that answer there, and I think he's made a couple of good points. And just how many people understand Bitcoin? I would suggest it's probably 0.3 to 0.5% of people. Is a very, very high number to pick. But people coming into Bitcoin and trying to understand it, it probably takes 10 hours to get your head around, okay, what are the incentives from an energy use point of view with mining, from a immutability point of view with the nodes, how to hold it, how does a supply cap work, and what's the supply issuance look like. And Roy mentioned there that often the use case to somebody who understands Bitcoin might be quite obvious, and the price doesn't make sense or correlate with why it's so useful and powerful in a certain situation. If you just put yourself in the situation of you're just trying to store your wealth in your country, and all of a sudden you need to leave your country and your currency's hyperinflating. Now that's happened to a few different areas of the world over the last decade, but recently, obviously, we've got the situation in Iran. If you were in Iran and you were holding your wealth in Bitcoin and you needed to leave the country, you can take it with you, and it's a global commodity, asset, currency, money that you can then transfer that wealth to another region of the world and hold it securely. And I think these use cases often get overlooked due to people focusing in on the short-term price. Bitcoin does move more than anything else. I think sometimes you need to just zoom out from the price and say, okay, what are the use cases to this asset class? Because being able to transfer your money around the world without confiscation and without permission can be the difference between being able to keep the value and the wealth that you have in a country when you need to leave a country. So it's often an advertisement to those people in those countries when events like that happen, that, okay, there's a serious use case outside of just looking at it as a long-term investment asset. in that it can protect you and your family.
It's interesting what you just say there. Sorry, slightly off topic. In my family, in my background, my parents, going back decades, we had to flee countries in times. It was actually Iran in the revolution. My parents had to leave, and they had wealth in the country. They were very wealthy. My parents' family, my dad's family back in Iran. And they had to leave 95% of it behind. They left the business behind, they left their house, they left their assets, lots of gold. They just couldn't take it with them. They managed to take bits back, and we still have it, but very, very, probably a tiny percent of what they could, because, there wasn't Bitcoin there that you could easily just have and you leave, and that's it. Their wealth was, you can't just pack it in your suitcase and you're fleeing a country when a dictator's looking to kill you. So
exactly,
we know it from firsthand.
It's the first time in human history, Ricky, that if you want to leave a country carrying £100,000, £1 million, £10 million, or £1 billion, you can remember 12 words in your head and get on a flight and leave to another country. And that is a powerful use case. Couple that in with a capped supply of Bitcoin and finite supply of Bitcoin, and then couple that in with the incentives that if you have an energy producing dam in the middle of Africa or in the middle of Canada and it's not got a town or city nearby, and you want to channel that energy into Bitcoin mining and produce Bitcoin and then send it to the other side of the world, you can. And I think when we're having conversations like this and I say, look, I look at it from a long-term perspective, I don't really look at the short-term price. I denominate in Bitcoin and say, okay, how many Bitcoin do we have on the balance sheet? We're currently holding 52. We want to hold 500. We want to hold 1,000. I'm not really concerned about the price this week or next week or the week after. Historically, last 10 years, I think it's done a 60% compound annual growth rate. Base case, we're looking at a 30% compound annual growth rate over the next 10 years. I don't end the day worrying about what price we've bought Bitcoin. I just worry about how much Bitcoin we have, want more.
The day the Iran war started, I think it was, correct me if I'm wrong, it was in the middle of the night or something. If you saw the price moves, Bitcoin fell 5% in a straight line. Gold and silver went up 5% in a straight line. So that just goes to show how the investor thinks straight away when there's times of, there's a war, there's something bad happening, pile into gold and silver, sell your Bitcoin, because it's still seen as that risk. It literally, all three charts, look at them, those two spiked up and that one spiked down, both 5%. And it just shows how people haven't seen and understand it yet, that that's actually the asset you should put in your money in when there's times of uncertainty, not the other way around.
Yeah, it's definitely a perspective that I've never considered before. So thank you both for enlightening me to that. Scott, for investors watching this unfold then, what's the difference between volatility and structural risk? At which point does normal turbulence become something more concerning?
I would say that they're looking at it from how much is Bitcoin worth today, tomorrow, this week in their currency quite often. So in the British pound or in the US dollar or in the euro or your mandated government currency, if you like, for the region that you're in. But from a structural point of view, Bitcoin is the most immutable, most verifiable, most secure network we've ever seen. And given that you can now own a tiny amount of that, or you can own a set percentage of it, and that percentage of the network that you own will never change. Not in 100 years, not in 500 years, not in 1,000 years. Now, those aspects are those fundamentals are so secure that I don't believe we'll ever see them change. For example, the supply issuance that's set means that 99%, I think 95% of all Bitcoin that will ever exist is in existence now. 99% of all Bitcoin that will ever exist will be mined by 2035, and it will then take until 2140 for the remaining 1% of Bitcoin to be mined. That will never change. If I see that change, I'll worry, Ricky, but you're not going to. And it's permissionless, and any valid transaction can be processed. That will not change. If that ever changes, yes, I'd be worried, Ricky. But the short-term sort of turbulence that you see and the fundamentals of Bitcoin are two very separate things. Any turbulence in the price is dictated by human emotion, third parties trading it, leverage in the system, and human nature doing human nature. Bitcoin just acts exactly as it's designed. And every 10 minutes, there's a new block that will show you every transaction that's happened, every wallet that's holding Bitcoin, and verify the network every 10 minutes, regardless of what goes on with the volatility in price. So there's very little that would concern me about Bitcoin itself. And I think that sort of conviction and belief compounds the more years you've been studying Bitcoin, the more years you've been buying Bitcoin, and the more years you've been through that volatility. So as a personal individual, 2016 to 2020, I'm buying Bitcoin. That was a volatile time. And it kind of compounds your conviction when you come into 2020 and 2021, you're buying in your business and it draws down 80%. You know, then you've got historical data from the last time you bought price agnostically for 4 years. But if you do the same over the next 4 years, the result will be up over 4 years. And right now we've had a sizable drawdown in the price and an unexpected drawdown in the price. Don't get me wrong, Ricky. I didn't come into the year expecting the price to be where it is right now. The upside of the price being where it is right now is that people have time to study, time to understand the asset, and time to begin what I would suggest is the sensible approach, which is buying a little bit every week, every month, consistently over a long period of time, whilst they read the Bitcoin white paper, maybe read the Bitcoin standard, and study verified, good, trustworthy resources on the asset.
Thank you both so much for your insights today. You actually answered all of my questions without me even having to ask them. So thank you very much for that. And to our viewers, you can let us know your thoughts in the comments. Is this panic, positioning, or opportunity? You can also get involved in the discussions on the billboards at stockhouse.com. I'm Ricky Lee, and I'll see you again next time on The Expert Exchange.